Hi and Assalamualaikum. So today our group will present about goods and sales tax, also known as GST, and sales and service tax, and known as SST. Okay, so this is the process of implementation GST and SST in Malaysia. GST was introduced on 1 April 2015 at 6%, later revised to 8% on 1 March 2024, with F&B, logistics, parking, and telecommunication services tax at 6%. Business could claim input tax credits, avoiding cascading tax effects. However, public dissatisfaction over rising costs led to its abolition on 1 June 2018. Okay, next, SST. It was reinstated on 1 September 2018, consisting of sales tax about 5% on 10% applied to manufacturers or importers, service tax 6% levied on sectors like F&B, telecommunication, and professional services. The Madani government will revise items subject to sales tax and expense service tax scope on 1 July 2025, following consultation with industry stakeholders. These changes aim to increase revenue, broaden the tax base, and minimize the impact on businesses and citizens.
Hi, my name is Zalifatul Bari'ah and I want to talk about difference between the GST and SST system. And from tax perspective, GST is wider tax base that cover the majority of goods and service. And GST is more efficient and transparent, but it requires additional paperwork and extra effort. And for sales and service tax, it applies to a limited number of product and service, and it is easier to operate but has more restricted tax coverage. From a rate viewpoint, GST is applied equally at 6% to the majority of goods and service at all stages in the supply chain. And for the SST, is fixed at 6% on some service, and sales tax is charged at the manufacturer or importer level at a rate 5% or 10% on certain goods, while SST rate is fluctuate based on the type product or service, and on GST is flat rate ensure that constancy. And for the perspective of exporting, on the GST, since they are zero rated, it allows exporters to claim input tax credit for any GST paid during manufacture rather than charging GST on exported goods. And look, under SST, since exports are normally tax exempted under SST, but company fail to recover tax paid on supplies or production costs because there is no input tax credit mechanism. And for the productivity perspective, GST is more effective and beneficial to compare to SST because GST input tax credit scheme reduce operating costs while promoting investment to improve cash flow. And SST may result in increased production costs because of the lack of input tax credit and possible tax cascade. This could prevent efficiency and lower competitiveness, particularly in supply chains with several stages. Therefore, SST might prevent increased production while GST promotes it. And for the tax credit mechanism perspective, GST is a completely integrated tax system that is applied across the whole supply chain, from manufacturing to sale. And for SST, it's a system that is not integrated and it's only used at a certain pace. Manufacturer or importer level sales tax and service tax on a certain service. In absence of input tax credit might result in tax cascade and reduce supply chain transparency. That's all from me. Thank you.
Okay, thank you Zalifatul Bari'ah. Okay, my name is Tengku Nur Alia binti Tengku Nazuraim. I will continue with which tax system yet higher revenue for the government. Okay, so we found that GST generate higher revenue for the government due to its border tax base and multi-state structure with input tax credit that reduce the tax cascading. However, it can raise compliance costs and living expenses. So for the SST, it more simpler and support effort to lower the cost of living but yet less revenue. Next, I will continue with the SST and GST affect customer price. Okay, SST and GST affect price differently due to how they apply. For GST is a multi-stage tax with input credit that help avoid double taxation, which can control price over time. While SST is one-time tax without input credit, which may lead to higher overall cost due to tax on tax effect. Okay, so for the economic sector, we choose food and beverage industry because in food and beverage industry, essential items were tax free under GST, but many packaged food and restaurant meals were taxed at 6%, increasing final price. While SST, most small restaurants are exempt from the 6% service tax. So dining at local entries is usually cheaper. Only large restaurants or franchise are taxed. Overall, SST tend to reduce the tax burden for consumer, especially in food and beverage sector compared to GST. That's all for me. Now I pass to Hannah Humaira.
Hi, my name is Wan Hana Humaira. So I will present why the government continue to implement the SST system. SST remain in place because it is less burdensome on the public and applies only to selected goods and service, making it feel less visible and more acceptable. When GST was introduced, Malaysian felt like impact on food, transportation, and household costs, leading to strong public backlash as it was linked to a higher cost of living. SST is easier to match for small and medium enterprise since it involves less paperwork and lower compliance costs, making it a more practical approach for businesses. While GST offers long-term efficiency, the government is currently focused on stability and public support. With tools like e-voicing improving transparency, Malaysia may gradually revisit GST in a more structured way. That's from us. Thank you.